Now you're gonna cheat the round too, guys.
Yeah, exactly,
Pavel,
exactly.
come on up. Elvin, where are you?
So please welcome on stage my friend Filip Genov, who actually we were in a panel just an hour ago on another conference from UniCredit Bulbank. Pavel Ezekiev, co-founder at NEVEQ. Elvin Guri, CEO of Empower Capital, and last addition, in the last moment, Gary Dodge from the Sea Fund. How's it going?
We're missing one.
Come on! You're about to sleep there.
Go! The stylish one.
Good. All right. So, once again, tell us a bit more about what you guys are doing. Who are you, and like what's your fund, and what are you investing in, and what kind of tickets, etc. From you. You're the closest, so.
Right. My name's Elvin Guri. I run Empower Capital together with a few other friends. I have two professional pet peeves. One of them is that I think that the debate on the whole topic of entrepreneurship is being hijacked a little bit by talking about startups and about technology. And that relates to my second pet peeve, that is, we're forgetting that there is real economy, there's industry, about which we are neglecting to talk and to invest. The goal of Empower Capital is to invest in the real economy. We started from Bulgaria, even though I'm Albanian myself, and a big shout out to my Albanian compatriots here. Yes, that's in short.
Cool, thanks.
Hi, I'm Gary Dodge. I work for SEEF. SEEF is the parent company of Seed, and SEEF is also an investment fund manager. The funds focus on investing capital into small and medium enterprises in underserved markets, for example, Central Eastern Europe, but also Southeast Asia, Latin America, and getting a developing presence in the Middle East and Africa. In Central and Eastern Europe is where SEEF started about 25 years ago, and I think Bulgaria was the second country we entered back then, back in about 93 or 94 with a fund called Karsvac Bulgaria. And in the region, we've made, I believe, more than 100 investments in more than 100 SMEs. We are not particularly tech focused. We're sector agnostic. I mean, we will do tech, but we also do, real economy stuff, and we try to, let's say, with our investing, create an impact with SMEs, with entrepreneurs, ultimately thereby with communities, but of course also to deliver solid financial returns for our investors.
My name is Pavel. I help manage two funds, NEVEQ 1 and NEVEQ 2. And we do, from early stage, although we do less and less of that through later stage investments in companies. In the first fund, we did the investments in companies from pretty much all over the world, I have to say. And in the second fund, we're limited to Bulgaria. But we have found a way how to go to, for example, places like India and Brazil. I remember that in '96, I had my first job at Microsoft in Seattle. And this was a time when, in the Internet Explorer, teams were trying to figure out how to fight Netscape. And since then, I worked for an investment bank, and so 2006, 10 years later, I started my first company. And because it went well, I figured that I can do more than one company, and I ended up co-founding NEVEQ with a friend and a partner, which I'm still with today. But that's the story.
This one doesn't work. Okay, hello everybody. My name is Filip, and I believe I'm the. Luban said we are the right people here, so maybe I'm the wrong guy here.
There are no wrong guys here, come on.
Joking. In brief, some long time ago I started something that grew up to be one of the top 5 corporate banking practices in Eastern Europe. Some time later I have created one of the top 5 factoring companies in the world. And right now, I'm set to build one of the best bank-driven venture capital practices. From that perspective, I would support Elvin. For us as a big commercial bank, touching as much as possible from the real economy is of paramount importance. We identify huge inefficiencies, which on the other hand for us are huge business opportunities, and we're absolutely eager to support entrepreneurs, no matter the industry, if the project and the team is good. So.
Interesting. Now, actually, I finally know why I split this panel into. Actually, this is the real economy investors, and not so digital. And the other guys are like more like into the startup hype kind of thing, according to what Elvin said. But Elvin, tell us a bit more about your investments until now. Like, give us a few examples of companies where we invested and why.
We've invested in healthcare, the second largest private hospital chain in the country. We've invested in a dairy manufacturer. We've invested in facility management companies. We've bought two and we've merged them together. And we've invested in technology as well, a software company created by Steve Kyle and a few of his colleagues. So, yes. Our focus is to take growing industrial companies or companies that help industrial companies to grow and help them become better, either by taking more market share locally or by growing abroad. We are entrepreneurs ourselves, so as a fund by entrepreneurs, for entrepreneurs, we think we can add value in more than simply providing money. And we try to do that by very actively participating, both as a sort of feedback loop, but also by providing input to those companies at strategic and at operational level.
So in terms of regionally, are you focusing purely in Bulgaria, or where do you invest?
By mandate, we are limited to invest in Bulgarian companies, but through the simple fact that we would like these companies to grow international, we are little by little expanding our horizon into the region. One of our pipeline investments, for instance, is looking to invest in Romania. So, and we're increasingly looking towards the Western Balkans. Okay,
cool. Gary? Yeah. But tell us a bit more about the companies that you already invested until now, and I would like to enhance this to my question to the previous panelists, like some lessons learned, and would you do some investments in a different way, or verticals that you would avoid?
Okay. Well, probably the largest sector, the sector we've invested the most in, although we've invested in a lot of sectors, almost every sector you can imagine, but is agribusiness. We have a long history with agribusiness and a long track record. And I mean, agribusiness going all the way from primary agriculture all the way to retail. We've done a lot of food retail projects and wholesale projects, and by and large have been pretty successful with those. I think, however, further to a point that was made in the first panel about, let's say, technology getting more and more into everything, we see that as well. And for example, we have a very interesting now agribusiness fund in India, which has a number of tech-related agribusiness investments in it. And I think you'll see those kinds of things more and more as well. In terms of lessons learned, God, that would take a long time. I said we've made a lot of investments and obviously had a lot of experiences along the way that have tried to make us better. I think at the end of the day, though, you can look at all the details. I would do this, I would do that, I wouldn't do this. A lot of it really just comes back to the entrepreneur and making sure you have a good relationship with the entrepreneur, and I would say a very aligned relationship where the investor and the entrepreneur are not necessarily going to 100% have the same views, the same goals. You have to, and those can change over time as well as people change, as entrepreneurs change. You have to constantly manage that relationship, work on that relationship, constantly add value, as you said, to your investment. It's not just money. Be a very good partner, and you have to make sure that your interests are aligned with the entrepreneur from start to finish. That is the most, I think, important thing that I've learned in this job.
Okay. Pavel, yourself, actually, you're a bit more like a veteran of the Bulgarian investment scene. Like you're a bit earlier than is the daddy, yeah. So you're with NEVEQ 1. Actually, it's been already a while. So you probably actually can tell us a bit more about as well about like a few of your investments with NEVEQ 1 and now with NEVEQ 2, but also like lessons learned. What was different some years ago when you started compared to now?
Sure. So it's been 8 years since we started first fund. We ended up
So you're
backing.
really the daddy, yeah.
It's coming close to 10. This is the first lesson: is if anybody tells you they will raise a venture fund and invest and exit it in 5 or 6 years, they have to be incredibly lucky, or they have to be incredibly in the right place, the right time. So I think the timing there is you cannot build a business for less than 10 years, really, if you wanted to have a solid base and be a solid business, which was the lesson from my first own startup. So the first fund, we backed 8 companies, and so far we've sold successfully 3 of them. 2 of them are going well. Let's say one of them is just break even, and the other one is really growing and raised a lot of funding with good co-investors, and it's going quite well. And 3 of them are dead. Which I think is the reality, and the sooner you learn to live with the reality that by far not every company you back is going to survive, the better focus, effort, and work you can put into the other companies that you have. The big lesson from this fund was, I think, help the management teams you back. First, you back people. You don't back businesses, you don't back technologies, you don't back products, you back people. So I think the first lesson there is try to have a meaningful dialogue with them so they can see sooner rather than later that they need to attract people who are more competent, not mature, but more competent and better than them in what they do from the incumbent stage of this company. They have to always find the better people. I think that's lesson number 1, and that pays long term. And the second lesson is you can call yourself a regional fund. The reality is every business has to start locally, and if you cannot convince a local corporation that your product is good for them, even if it's a smaller corporation relative to anything in Chicago, New York, or Palo Alto, then your sell there is much, much harder. So start close to where you are and with the people that you know, and that will pay off also. You may lose a year or 2, but when you're out there in the bigger marketplace, you will win. From the second fund, I think it's early to say. We've just backed 14 companies literally until last week. We closed our final deal, and I think what we tried to do there is, in the first fund, we backed some really deep technology companies, and now we just try to keep it straight, simple, and focused on one task, one mission, one customer segment, one market, and in some cases, one country. Why I think the world has become incredibly more competitive. Just if you look at the composition of the panel, sitting next to the largest bank who's now doing venture across the industry, and many other people. I think 3 years ago, let's say 5 years ago, there were 2 or 3 funds investing in this country. It's probably now a dozen different funds. So you have to really find people who know what they're doing, good at what they're doing at, and know that they can change, because markets and products will always end up changing, and it's the team task to change along and make the pivot.
It's just one reaction to what you said about like start regional and like do business in the region and then grow. This is actually interesting because sometimes we sometimes do think that we have to kick out the companies immediately out of Bulgaria and start to push them to bigger markets. So why do you think that it's better to start locally and then grow?
It's just based on precedent of 20 investments we're looking at. The companies which tried to immediately catapult to Palo Alto or to China.
I'm not necessarily saying Palo Alto, but like, you know,
So
Germany or
even in the
London
region,
or-
look, there's, so Bulgaria has 30 companies which have 100 million plus in revenue in euros. So these companies have supply chains. So in most of the cases where a company survived, got to break-even point, raised more money at a better valuation, and ultimately grew, they actually managed to start with 1 or 2 local clients as a proof of concept to
But
that
this
what
is,
they
this
did
is
was.
valid actually more for the B2B businesses.
Yes, we really didn't do any B2C in Fund 1, so I'm
Right,
about to
okay.
tell you
Okay,
the
good,
experience
alright.
next year, same time.
All right, okay. Philip, tell us a bit more about your intentions. Like, well, what are you guys gonna look? Like, what kind of companies are you gonna look for?
I gladly will, but I will start with one big thank you, and that's to all the guys in the industry who have started it in Bulgaria before us, because your job, guys, has been an inspiration, and we learned a lot from you, and we hope to, even if at some moments we will be a competitive organization, it will be with utmost respect. Then coming back to what we want to do. The other guys mentioned it's much better to have a happy donkey than a tortured animal that somebody was pushing to become a unicorn, and this is one of the first lessons we learned when we analyzed what and how to do in Bulgaria. Now we are happy to be a bank, which means our resource structure is a bit different, so we do not need to exit, quite frankly, if the company is doing okay. And this is actually in our strategy. We will build a private equity operation. We start with startups and we expand regionally. As far as digital versus real economy, I would say it's not a competition or controversy. It's just a combination. We are building right now a quite big venture capital fund in Milan and UK. And we allocate 200 million euro just for fintech. So this is a hot topic for us. In Eastern Europe, however, we will focus more on the local economies, local businesses. If there will be a unicorn, we would be happy to part of that. But if it will become a normal paying client, contributing to the business community, for us that's a success story too.
That's very good, because this is like everything that we at Launch Club don't look at. So it's very complementary, and actually I think we need that kind of investments in the region as well. Okay, so I had this question to the previous guys as well, like how to kind of push the entrepreneurs and make them, you know, change a bit their mindset, be more fast, get them out of the comfort zone. So what are your thoughts and your strategy on that?
I belong to a minority who think that not every small business is an entrepreneurial business, and not every big business is sort of not capable of having or doing entrepreneurship. So when we speak to companies in which we invest, we look first and foremost about the mentality. We spoke a lot here today about investing in teams and about the entrepreneurial mentality. What we need most in these countries in which we operate is innovation in mentality. So we invest a lot of time speaking to the owners and of the businesses in which, and the management to the businesses in which we invest, about trying to figure out whether they have the right mindset in place. If they do, then the conversation about getting out of their comfort zone is basically non-existent. They already know how to push the envelope themselves. If I have to get down to the level in which I have to push the company, then I might as well take a majority share and start running the company myself.
Well, I think from the get-go, if the entrepreneur is bringing in venture capital and a venture capital partner, that's already stepping out of the comfort zone. So, you know, and as you said, I mean, a large part of the selection process and the diligence process on the part of the investors is discussion, feeling out the entrepreneurs in order to see if they're going to be willing to do so, in the ways that are going to work for everybody. So, hopefully, if you've done a good job up front, you're getting over a big hurdle already, and now you're in, and suddenly the entrepreneur's already out of the comfort zone. But from there, I think it really goes to two levels. One, I don't think it's so much an issue, pushing the company to grow, because presumably if we've gone in, the company, the entrepreneur wants to grow. There's a difference though between, oh yeah, I want to grow, and then the reality when you try to make it happen and you try to implement the changes in the business to allow it to happen, a lot of which involves bringing in people, as you mentioned. Most of these companies, even at the size that we're talking about Reinvest, they're still very entrepreneur driven, and you have an entrepreneur which is very good at delivering a product or a service, and maybe has very good contacts locally to drive sales, but they're constrained to take the company to the next level, and to take them to the next level, you have to usually put in good systems, the accounting, finance, information, number one, and number two, you have to bring in a middle management team that can work with this entrepreneur and take things off from the entrepreneur and facilitate the growth. And that very often is a process which is way out of the comfort zone of a lot of entrepreneurs, I think, even if they don't think it will be before they get deep into it. It's just again a constant process of working with them and managing it and listening to them and trying to find solutions to this that they'll be as comfortable with as possible, and that will work for everybody. And again, doing it all to hopefully get towards a common goal in the future, which ideally is selling a much more larger and valuable company, than it is today. So,
I think there's a soft set of factors and a hard set of factors about pushing the limit outside the comfort zone. I'll repeat again, guys, find people that are better than you are. Just keep finding those people and don't be scared that they will minimize you or marginalize you. Your company will do better, your equity will do better, everything will do better. I think the second thing is to make people accountable about forecasting and planning beyond the short term. So people give you business plans, and often they give you the plans. They know they give you plans and numbers that you want to see. So they learn what you are after, and they give you the numbers. But scrap that, push it back and say, okay, let's now look at what's tomorrow, but then what is after 2 years. Don't ask for 5 years. But they need to be accountable and hold them accountable to teach them that they will be accountable for what they showed you 2 years ago about where they're going. And I think, last but not least, set a culture. Make sure that they can spell out what their culture is from startup company to mid-sized company, looking into the larger company, because the culture gives you a point of reference when you're trying to bring these better people. Do they identify with your culture? Not are they just here for the check or because you're just being dubbed the hottest startup in the country or the region?
Right.
Well, how many of you would put comfort and bank in one sentence? So generally, whenever we talk to people, they're already out of their comfort zone. But the funny part aside, the thing we discover and we challenge entrepreneurs the most is, in one sentence, to be able to say what are they doing and why they're going to succeed. And maybe it's a bit cultural, and we talked with Stefan on the way here. The most difficult thing which I find in Bulgarian entrepreneurs, and it goes also to startups, is actually two set skill sets. One is the possibility to sell and market themselves, and the other one is actually linked to that, and it is the possibility to make good and sound predictions and extrapolations on what's going to happen. We are quite frankly tired to read things that are prepared exactly as Pavel also mentioned. People are expecting that we would like something, so I see it there in the investment deck or in the business plan, and it's quite tiring. So challenging on our behalf starts, and it's very strong there. Maybe one final thing. Generally, maybe all investors do it, but I find it challenging for many young entrepreneurs that they at some moment see that they will be accountable for what they are going to do with the money. Spending, costs, things like that, especially those who have already started something, they're coming to us to top up, and at some moment we say, okay guys, but there will be some discipline in the costs. It's for your own good. We don't like to do this, but it needs to be done. And actually we lost one deal exactly for this. Elvin can relate a bit to that. So that's it on my behalf.
Okay. So we are gonna do one last question, like round for four of you guys, and then maybe we'll take one or two from the crowd. Future, like how do you see, like are there, Elvin, are there any specific businesses or verticals that you wanna invest in, or like how do you see the near future?
The beauty of the smaller countries is that they're not very interesting for large organizations and large companies, which opens up lots and lots and lots of possibilities for local entrepreneurs. That's where I see a huge potential, especially for creating regional champions. That's what we would like to support as a fund, creating regional leaders that are sufficiently attractive to large companies to come in and in one fell swoop take over 4 or 5 countries. Virtually every industrial segment that you think of, whether it's internal consumption, whether it's retail, or whether it's manufacturing, both for internal consumption and for export, there's lots and lots and lots of opportunities. So I'm very optimistic.
Okay.
Well, I agree with that. You know, in many industries in this region, you know, they're very fragmented still, both on a national level and on a regional level, and I think that fragmentation will reduce, and you'll see larger players in some of these spaces, and ultimately more strong regional companies that will be good acquisition targets. I think also, you know, going back to what was said in the first panel as well, and which I said a bit earlier, but this technology, let's say, creeping into these more traditional industries, so not pure tech companies, but sort of applied tech. I see that more and more happening, and I think that will create a lot of opportunities both for the technologies itself, but also, you know, the effects that they have on these industries that, for example, we're often investing in. So,
I would say the conventional industries where technology is still underrepresented, or it hasn't taken a role of a catalyst or a driver. So people call them vertical marketplaces, but places which are slowly but surely moving to adopt some kind of technology into mainly into their interaction with the end customer. This is where I think a lot will happen, and I think where small place like Bulgaria has a chance to make an impact, connecting the business to the customer and making this as simple, as smooth, seamless as possible.
Extremely optimistic as well. It's a business on the rise. It's a very, very good thing to be in right now. And one simple question actually to the audience. How many of you are right now entrepreneurs running your company? Okay, so we're there, guys. And there are more coming.
Good, good. Steve, do we have anything? I don't see the Twitter wall. Do we have any questions?
There has been much. There's been a couple questions. One is, where are the women investors? We had a panel earlier about women in the workforce, and I know Pavel has a partner actually that is a woman. But where are the women investors, especially in this region?
We have a CFO, you know.
Well, yeah, well, this region is a little bit behind Silicon Valley as well, because we see that a lot there. Are we seeing more and more women partners coming up in your firms or your colleagues' firms? I didn't ask the question, it was a tweet. Everybody's silent.
No, but it's the right question to ask.
It's part of a much larger debate about the women's role in the society. Unlike in the West, socialist countries had a tradition of getting women involved in work. So Western societies have something to look up to and to learn about women's involvement in business. As far as women's involvement, In my previous company, which ended up having 3,000 people, 85% were women. Half of the management team were women. As far as the venture capital or private equity industry, there was nothing, with the exception of NEVEQ, 2.5 years ago. So give us some time, yeah?
He keeps looking at me.
You're the messenger.
Shoot the messenger. I have a question for all of you guys. Is there another question here? Oh, you had one. Okay. Can I borrow one of your...
Get one of, there are two mics actually.
There we go.
Get the other one. Good.
Thank you. I'm Tanya Markovska from Macedonia. I wanted to ask you, you and the previous panel had quite a few regional funds which are supposed to cover multiple countries, but the reality is that most of the investments happen very close by the headquarters where the fund is located. So I was wondering, what is your opinion of having intermediaries in each country that you cover that would help build the pipeline and prepare the potential founders to better pitch their products, their companies in front of you as investors, and also to manage them later on? Thank you.
I believe in that as long as their success is directly tied to the success of the fund itself somehow. It's not possible to convince a team sitting in Romania that I will help them with anything but money. I need to either be there half the time or most of the time, or have a colleague who is based there full time. So if there is an intermediary which is very smart, experienced in the business, and they're happy to pay it almost on a carry basis, of course they need to have some substance, but if their success is largely tied to your success, then I believe in that model, and I think we're going to be applying that.
Sounds like some job opportunities for us.
Yeah, venture partners across the region.
So, okay, yeah. Well, I do think that if you're going to invest regionally, I mean, you have to have a very active role investing and working with the companies, and it really works best if you have a footprint and your own footprint on the ground in the companies that you're going to, in the countries that you're going to invest in. That does make regional investing more of a challenge. I do, to your comment, I mean, I will say that we have a headquarters in the United States, and we have invested in a number of countries in the region, in CE, but we have done it, of course, by establishing local offices and local teams in all those countries where we invest. Anyway, we think that's very important to the model. It may be one reason why we haven't seen more regional businesses develop. It's just, let's say, even the available human resources of the investors themselves. But yeah, I think you have to really have a very active on-the-ground presence if you're going to work with the entrepreneurs in that country and make investments there. So.
To paraphrase Gandhi's saying about Western civilization, I think it would be a good idea to have intermediaries. The trouble, though, is that instead of having one set of problems, communicating and finding a way to find a solution with the company, you have to find, you have two problems, one with the intermediary and the other with the company. Conflict of interest, all sorts of other issues, including having to educate the intermediary on how to do their job. So it is complicated, especially the smaller the country gets, the more complicated it gets. I've tried to do business and have done business in Ukraine, Romania, Serbia, Kosovo, Macedonia, Albania. In all these countries, the quality of the intermediaries has been problematic. But increasingly, thanks to the presence of the big accounting firms, and also the presence of returnees, immigrants that have done work in the West, in various investment banks and so on, the quality of intermediaries has improved considerably. We've used intermediaries in Romania, we've used intermediaries in Serbia. So yes, there is something to be said about their existence, but it's not a clear-cut situation.
Can I ask one more question?
Yeah, okay, go ahead.
All right. Well, because a lot of the people here are in the region and not in tech, what I saw from the first panel is if you're an entrepreneur and starting up and not in tech, there's this gap. Because you guys are a little more late stage, you want a little more traction. So what's your advice you could give to these guys who are not in tech but want to do a business in Morocco or Albania or Macedonia or Bulgaria or wherever? What are the tools they can use? Can they get convertible net notes and you'll still invest in them? Can they do crowdfunding? Can they do these tools and will you still invest? They mentioned angels, but that can also be tricky with the amount of equity angels take in early stage. So what are your advice to those people in the region, not in tech, to get on your radar? What tools can they use between now and your radar screen?
Good question, yeah.
Thanks.
Virtually all private business in this part of the world is entrepreneurial business. All of them. You look at the big businesses, the oligarchs, they're entrepreneurial. You may not like the way that they act, but they are entrepreneurial in it. So, small businesses, if you are in the right mindset as a manager, as a founder, you'll find a way to succeed, even in this tough environment in which you cannot find funding. And then clearly there is a gap for the startups that are the so-called non-techs. But let's face it, there's not too many of them. Those that do start up and set their minds to succeed have succeeded so far.
Oops. Anyone else have thoughts on if you're a non-tech, how to get?
I mean, you're right. There's a gap there. I mean, I've seen some small, very early stage funds in the Baltics and in Poland, for example, invest in a few, non-tech types of projects, but they're kind of few and far between, and so there is definitely a gap there. But I mean, I agree with what you said. There are many resources available to people who are resourceful and motivated beyond funds. You have friends and family. You have ways to develop relationships, business relationships, and get contributions in kind, versus capital. And there are all kinds of ways, I think, to make it happen if you're willing and motivated to make it happen. And then when you get to the next stage, there are funds available to invest and then take your company even further.
Yeah. Filip.
For Bulgaria, at least this gap will be closed second half of this year. So if you could wait a bit, please do wait a bit. Otherwise, fingers crossed.
And then he'll start growing into Macedonia and Albania and the other.